Okay, Kate, do you have another speaker for me?
Yeah, we've got Eric Gebhard.
All right, Eric, how you doing, man?
Hey, how you doing, John? Good to hear from you again.
You have that Alfa Romeo, don't you?
Yeah, in fact, speak of the devil, I just chatted with someone who's interested in buying that car this week, so we'll see what happens.
Sell, sell.
Yeah.
All assets are about to collapse in value. The vintage car market is the high beta element in the collectible asset class.
Yeah,
I
definitely,
know because I've
definitely
owned
softer.
several Rolls Royces from the 1920s in the past, and you never want to try and sell those in a recession.
Right, that's right.
Anyway, go ahead and get your PowerPoint up. Um, uh, Eric Gebhardt is introducing the ThetaTrader, a platform designed to simplify complex option spreads through automated trade selection and risk management. It features the Dragonfly, a unique six-leg spread, and a one-tap trade alert system for seamless execution. He also helped create AV Systems, a user-friendly platform for automated futures trading with algorithm-driven strategies. Outside finance, Eric enjoys vintage cars, biking, and volunteering on the Dean's Advisory Council at La Sierra University. Okay, so I see here how to automatically trade options like a hedge fund.
Perfect.
So I'm going to go ahead and mute myself, and you have until 5 minutes before the hour when we hand out our next batch of prizes.
Great, great. All right, thanks again, John and Kate, for having me. And like John said, we're going to look at how professionals are trading options and using automation to help us along the way. So we're going to look at our proprietary algo that helps build those trades for you. We're going to look at how to respond to a trade alert with one touch. We use automation with risk and profit controls. And this is something that does not require babysitting your screen. We can also go backwards in time and look at a time machine, I guess you could call it, for testing out option strategies. And best of all, you get to speak to real people when you work with us. So we're licensed and experienced. And with that said, let's go ahead and move along here. Remember, we're speculating and there's always risk when you're trying to make a profit. So with that said, do take a moment and look at that risk disclosure. Probably better to take a screenshot or a picture of that if you want to read all the nitty-gritty details. But the real key here is that there is always risk involved with trading. You should be using risk capital, and past performance is not indicative of future results. And I think you even heard Steve mention that as well, about looking to the past to sort of forecast the future. So in that regard, let's keep moving. A little bit about us. Since 97, Altivest has been servicing clients. We've traded millions of contracts along the way. We are a registered introducing brokerage firm. Um, there I am with some of our floor traders down at the Chicago Mercantile Exchange on the S&P 500 options pits. So we created the Dragonfly strategy as well as our proprietary order execution technology that makes that happen and makes it all possible. You can only really do that through us. So clients have traded millions and millions of contracts along the way using our solutions. We're regulated and we're registered as a brokerage firm. We're registered with the CFTC, a member of the NFA. We're located in California. A little bit about myself. I have my BS in Business Administration from University of Southern California, co-founder of Altivest, and I've had various securities licenses over the years, Series 6, Series 63, insurance, and I currently have my Series 3 commodity futures license as well as my Series 65. That's what investment advisors have in terms of their licensing. So we're going to jump into the heart of the presentation here, and then we're going to look at a demo here of ThetaTrader and also how to respond to those trade alerts. But this is really your trading competition. It's not the guy behind the screen. It's this thing right here. So no emotion, automation, built-in controls. 70% of the markets is algorithmic or software driven. And that's according to within the American stock market. So, and that number is only increasing. I think at some point JP Morgan thought it was 90%. More than 50% are global trading controlled by algos and non-discretionary strategies. So traditional fundamental analysis is no longer enough. And that's absolutely true. A lot of the moves you see are just driven by machines and flows, as they call it, an order flow. But we're going to look at how we can use professional option strategies in this environment. And we're going to look at how large institutions and funds and money managers might be using option strategies and what types of strategies they're using. And for an example, we all know how insurance companies operate. So maybe we can trade options like an insurance company operates, where we get paid the premiums to assume risk and we sell and we manage time along the way. We're always insuring ourselves with hedges, and we're consistent and are patient with our process, and we look at the probabilities. In the long run, the math favors a lot of these types of strategies, favorable long-term probabilities, and that's really what a
David,
insurance
John
company.
Thomas, I saw you won
Oh,
the lottery this morning to get
I can hear you there,
the
John.
Hedge technology letter, which you already get as part of your concierge service. So I'm going to offer you instead the option trader.
Okay.
Yeah, go ahead.
Yeah, that's okay. All right. So we're looking at the mathematical probabilities and statistics, just like an insurance company might. So we want those odds to be ever in our favor. So that's the whole idea of the type of option trading we're doing here. So we're looking at collecting premium, just like an insurance company. So we're going to manage that risk and reward. We're not looking to get too greedy here. We're going to need experienced people along the way to help us, and of course the correct tools and automation to make that happen. So lots of base hits. We're not swinging for the fences typically with any one of these types of premium collection strategies. And again, these are short option strategies, and they can be non-directional. So market could be sideways, could be bullish, really bullish, slightly bullish, or bearish. It doesn't really matter. Strategies for really any type of environment. So each outcome is targeted with a fixed amount of risk in advance. So before we jump in, we're going to learn some Greek, some of the Greek letters here of the Greek alphabet. And the first is delta. And how much does the option value change with the change in the underlying asset price? So that's also how you define delta. At least options traders will say that's also the approximate probability of the option expiring in the money. So for example, 0.25 delta, that suggests a 25% chance that the option expires in the money, but conversely, a 75% chance that the option would expire worthless. And of course, delta is always moving with price and time. It is not just a static figure. And it is not the probability of a winning trade. So keep that in mind too. And then there's theta. So that's sensitivity to time, or it represents time decay. And options are a limited or wasting asset, is what they call them. They have a limited lifespan. Every option has an expiration date. And you refer to the theta as a negative number, and it equals 1 day of time decay. So what does that mean? Well, let's look at a quick example. If an option is 10 points and theta is negative 0.05, the next day the premium would decline to 9.95, and the next day after that 9.90, and so forth. All other things remaining equal, just looking at theta. And here's what it looks like on a graph. You can see here as you approach time zero, the percent of the premium remaining on that option value drops and drops and drops, especially in the last 30 days. It starts to get pretty steep. So that's the most rapid, I guess you could say, window of time decay. So Wall Street pros use multi-leg option spreads to collect premium. Basically, you're buying and you're selling different option contracts, a common way for investors to hedge risk and volatility. It's cheaper because you can offset your cost by the proceeds from different contracts. And it's been used by Wall Street professionals for decades. So if Wall Street's using it, then maybe we should too. And that's what we're going to look at here in this demo. And here's just a couple examples before we get into the software. Here's selling an E-mini S&P 500 call spread. So you're selling an out of the money call spread. You might be bearish, you might be moderately bullish, or you could be sort of agnostic in your outlook or non-directional. So here's an example where you sell this out of the money call spread. You sell the 64.10 call, you collect 4.5 points in this example, and you buy the 64.30 call as protection, but you have to pay money for that protection. So you pay 2.25, but the net result is you collect 2.25 points or $112.50, minus your commissions, of course. So that's what that would look like. You sell this out of the money call spread, and then you hope to cover it at some point to close it out before it expires. And when I say cover it, you buy it back for less than what you paid for it. I'm sorry, than what you sold it. You sell it high and you buy it low. That's the idea. So here's an example of the put spread, just the exact opposite inverted scenario. And you can see here, you're selling this out of the money put spread, collecting the premium, and then as time goes by and before it expires, you're going to want to cover that and buy it back. So maybe you've covered it depending on the theta decay, depending on the volatility in the market. You know, it might take a few weeks to cover that particular spread, and we're going to look at that in just a moment. Here's an iron condor, and it's just a combination of the put and the call spread. You do those simultaneously, and it's more of a non-directional strategy. And this is simply what it looks like here. You sell this out of the money call spread, and you sell an out of the money put spread, and you do that simultaneously. So you collect premium on both sides of the trade. The net result is you collect premium by the put transaction and the call transaction. And you can see the market kind of moving along here. And then you try to, of course, cover that position as time goes by. And remember, these are covered strategies. And so what happens is after you place that iron condor and after theta decay works, you can see in this example on this day here, you buy back the spread, and you can see this blue arrow here pointing to something called the RTI. That's called the risk thermal indicator. And that's the profit taking signal that ThetaTrader gave us to close out that position at that point. So we're going to look at that in some examples here. And before we jump into the demo, you're going to want to look at the dragonfly. It's a variation on the condor. So it's a non-directional premium collection strategy. Looks a little bit busy and overly complicated, probably if you've never seen it, but it's actually not, because the way we do it is one order. But you sell 4 calls, you buy 3 further out of the money, and then 1 closer to the money. And you do that same structure with the puts. And you notice the 1 call that you buy here is 50 points closer to the money in this example. So that changes the dynamic of this trade, and the risk reward characteristics are dramatically different compared to a condor, because you own this particular call and this particular put. And since they're closer to the money than the ones that you've sold, they have a higher delta, and they'll react more quickly to movement in the market, and theta decay also will not impact them as greatly as the ones that you sold that are further out of the money. So here's an example. That same example, you place the dragonfly, here are the calls, here are the puts, time goes by, and then right here you get the signal. The blue RTI says take profits and cover that position and go on to another trade. So stick around here in just a few minutes. We're also going to look at a live trade alert. So we're going to show you how to respond to a trade alert. You can do it in one touch. And you just simply touch accept or reject on your phone or through your dashboard or your browser. And that's simple as that. And then there are unique bullish and bearish strategies too. It's not just non-directional all the time. ThetaTrader allows debit spreads as well as credit spreads. What we looked at were just credit spreads. But here's something called a bull hedge or a bear hedge that we kind of came up with those names a while back. But simply put, you're In an example of a bull hedge, you might be bullish, and so you sell an out of the money put spread, and with that money, you use it to buy an out of the money call spread. So if the market moves higher, that position should do very well for you. And then of course there's a bear hedge as well, and that's sort of the inverse of that. So if you're bearish, you would sell an out of the money call spread, put that money in your pocket, and then use it to buy an out of the money put spread. And you can usually do these bull or bear hedges for even money or even a small credit. So it doesn't cost you anything other than your commissions, of course. But of course, your risk is of course, market goes against your short position, and then you have to cover it just like you would any other short position. And I'll show you how that works in the demo. But how would you know where to begin? How do you create these spreads? Which markets are you going to trade? Which strategies to use at what price? What's your timing? How do you manage the risk and the reward? And of course, that's what ThetaTrader will do for us. Pre-built option spreads. Our algo creates what we call theta trades. And these are one-touch responsive trade alerts. We just talked about that briefly. Any market condition, bull, bear, sideways, flat markets. Then we use automation, something called the risk thermal indicator. You saw a little bit about that. That's color-coded. So I'm going to switch my screen here, and we're going to jump into the demo of ThetaTrader. And you have questions, by the way, feel free to put them in the chat and ask. I don't always get to them right away, but please do. And I probably do answer questions along the way without even knowing you've asked the question. Okay, so it looks like we are now viewing the screen here. This is our ThetaTrader dashboard. And you can see here your open, well, I'll start at the top here. These are the current theta trades. See bullish or bearish or non-directional, and these are the markets that we're looking at: the E-mini, S&P 500, and NASDAQ 100, as well as the Russell 2000. We do have some gold in there as well. And then this is a trade alert, and I'll get to that in just a second. But these are open short positions or open spreads that you've sold. And you can see the RTI and the different colors, and I'll explain that in a second. And these are any open long or bought positions. And again, you see the color coding there. And this is your account information here. And that's directly from your AltaVest trading account. And the first thing I can do here is what we can do is look at a non-directional strategy. And you've got dragonflies, you've got condors. So you can see here, the computer or the algorithm has chosen some trades. And we'll look at a condor. Here's a March into month condor. And that's on the E-mini S&P 500. And the reason why we trade that market in particular, it's really, I'll get into some details, but really it's about liquidity. That's where all the volume is, so to speak. Okay, so this is what this looks like here. Here's the current market price, and here's the call spread you're selling and the put spread you're selling in this particular example. And we'll look at this table here of all the details, kind of fill in the blanks. As 20 days till expiration, settled at 2.8 points, $140 gross premium, put risk, call risk, commission. Here's cash required, profit potential at expiration. Here's something called the targeted return on cash, and then your targeted annualized return. And you'll notice your targeted annualized return here and here, for example. These are just to compare one trade to another. It's not to suggest that you're going to receive a 290% return on your account just by placing this one trade. It's just really to compare one trade, apples to apples, to give you some context. And the trades that have the least amount of days till expiration are typically going to have the higher targeted annualized return, if that makes sense. That's just because it assumes you're turning over that trade every 17 days, which is really not realistic. But In any case, so you see the cash required of 881, your profit potential of 119. And you might think, well, that seems like a little bit of an inverse relationship to what would be most favorable. Why would I put up 881 to try to make a maximum of 119? And the reason would be because if you look at the strike price here on the puts and calls that are being sold and look at the delta, 9.67 delta, that means there's over a 90% probability that this put being sold will expire out of the money. Then a 6.64 delta on the call. So over a 93% probability that this call being sold will also expire out of the money. So those are those higher probability outcomes. And that's just the math. So really, these are the types of positions that over a long period of time, you're going to have probably a lot more winners than losers. And it defaults here to a sell because you're selling this particular spread. You can change the quantity, up or down. We'll go ahead and do 6 of these, and you can see here, and we'll place that order. And it's just that simple. And I'll go back to the dashboard and let's look at a dragonfly. And then we're going to run through a simulator and look at that trade alert as well. Oh, look, another trade alert just came in. Okay, so we looked at the condor. Now we'll look at a dragonfly. And for the demo account, I just basically pick the trades that have the most days till expiration. So this is the May week 3 expiration for the E-mini S&P 500. You can see the profit potential here at expiration. Here's a graph of what that looks like. So again, you're selling 4 of the calls. That's the red line. You're buying 3 further out and then 1 closer to the money. This happens to be 50 points closer to the money compared to the 4 that you sell, but it's not always 50 points. It just depends on what the algorithm decides. But here's the current market, and you're selling these 47.75 puts and these 62.25 calls. So quite a large margin of error there. In the next 66 days, you see the cash required, 45.79, profit potential of 421. And you can see it's higher than a condor because you're selling in increments of 4 puts and 4 calls. If you wanted to do 2 dragonflies, it would be 8 puts and 8 calls. But you notice the delta 9.66 and then 6.1. So you've got basically a 94% probability that these calls would expire out of the money, and over a 90% probability these puts that you're selling would expire out of the money. So we'll put 3 of these on. We'll go ahead and place that order, and it's just that simple. It just assumes you're filled on the demo account. But that's how easy it is to, view the theta trades on any given day and then place a trade using the dashboard. Now let me show you. There is a trade simulator right here, and I've already loaded some trades. And let me squeeze down the screen. So here's an iron condor, the February end of month. We can use these buttons to go forward and backward in time, or use it here just to play. And you can see as day by day goes on, there's a green RTI, there's a yellow RTI, and that means slightly elevated risk, but still do nothing. So theta decay is starting to work as the market kind of trades back and forth here. You can see the P&L on the trade still hasn't turned profitable, and that's common because theta decay takes a little bit of time, of course, to chew off the clock. And the green RTI is good. That means do nothing. And then it turns blue. That means take profits. So with 8 days remaining, you have a profit-taking order. And a real key to this here is you can automate this. And I'll show you how to do it. But when it turns blue, you can automate that So an order is placed for you. You don't have to screen watch and monitor that on your own. So remember this date, February 21 is when you had a profit-taking signal. So let's look at a dragonfly. Same expiration. Look at this here. February 7, it turned profitable and you would have a profit-taking order. So you're talking 2 weeks earlier, compared to the condor, you have a signal to close out that dragonfly. And that's a big advantage to the dragonfly at times, not always, but in this case, you were able to close out this position 2 weeks prior to a condor, the equivalent condor. And that can be a big benefit at times. And it's not always going to be the case, but we do like the dragonfly a lot. And that's one reason why. So here's a condor, another condor, and let's see what happens here. Kind of forget what happens. Okay, turns orange, elevated risk, yellow, slightly less risk, but you can see got real close to your upper boundary on the condor. And then it turned red. So you took a loss on this. When it turns red, you can automate that as well so that it places an order for you automatically and covers that position, and you take your loss and you move on. So this week 3 July expiration condor ended up being a losing trade. But here's the July week 3 dragonfly. We're comparing apples to apples here. So instead of a losing position that you had on the condor, the dragonfly actually generated a profit-taking order with 22 days till expiration. So again, the different structure of this trade here, being that you own this particular call compared to the 4 that you've sold, it can change the dynamics quite a bit. So in this case, a condor was a losing trade, but the dragonfly was a winning trade. And you saw earlier that sometimes the condor versus the dragonfly allows you to close it out earlier. Now here's a bull hedge. So you might be bullish, and if the market cooperated and ran higher, then you could see this trade here would do well. Essentially, you sold this out of the money put spread and you bought an out of the money call spread. So you could place that type of trade in really any environment that you might be bullish, or you could use it as a strategy to maybe even hedge part of your stock portfolio, one way or another. And when you're speaking of hedging, normally you refer to that in terms of the markets dropping. So here's a bear hedge for you. So you can see how this trade worked out well. You simply, sold this out of the money call spread. You use the money to buy an out of the money put spread. And if the market drops, then the position as a whole should do well. So that's what happens in these examples. And you can also use these tools here to go all the way. You don't have to, you don't have to just use the play button. You can just jump right to the end to kind of shortcut it. So I also want to point out that part of ThetaTrader is our daily research, something we have called TradeScope, and we make that available to all of our clients. We do some analysis here on the charts, but also looking at the global macro landscape, and then we look for anything on the calendar in terms of economic reports and so forth. And that's done daily. It's just this one screen here, I guess, or it's probably more like 2 to 3, but you can get through that very quickly. We also offer our daily commentary. That's something that we do, just kind of gives a brief rundown on what happened in Asia, what happened in Europe, what's happening in the US, and then looking ahead. And then, of course, your current quotes and so forth. So then there's also an economic calendar there. And then here's how to do the settings in terms of adjusting everything so that it's automated. So you go under your account, you go under settings here, and this is how you activate your risk manager. Check that box, and then you can choose what level you want. right now the demo account that you saw is set at the 50 risk level. That's your default level. So you can leave it at that, or you could choose orange. That's a 0.38. And that's okay if you do that, but keep in mind that you'll have more frequent losing positions, but they will be smaller losses. Or you could customize it anywhere from 50 down to 25. So again, it's kind of a trade-off. You could do this down as low as 25, and you'd have smaller losses, but they'd be more frequent. I just used the default setting. Then here's your profit directive. You activate it here, check that, and you just have to save your settings, and then save your settings here as well. Just that simple. There's a great help file as well here. As part of ThetaTrader, you go under help, and you can see here, I've got it open here to the glossary, and this explains the RTI colors here. We're not going to get into all the details, but it explains it all, definitions and all the strategies, all the symbols, so on and so forth. It's all available there within ThetaTrader help file. Now let's jump into the trade alert real quickly. So we will view this first one here. This is a Dragonfly trade alert. Let's take a look at this. So you'll receive trade alerts. They'll come to your dashboard just like you saw, and they'll also come to you via email, and they'll also come to you via a text message directly on your phone. People really like those on the phone. So you'll see a brief description. It's the end of month April S&P 500 Dragonfly. So this is what it looks like on the graph. You can see the calls, you can see the puts here. This is where we're currently trading. And it's all pre-sized for your account. So the alerts are already customized and pre-tailored for your account. If you already have this position in your account, you won't receive an alert. So you're not going to have a concentration risk. And then also the quantity is adjusted to your account, and it's pre-sized so that you only have a small percentage of risk on the position compared to the account balance. In this case, it pre-filled the order here for a quantity of 8. You can lower that if you'd like. You can lower the quantity, but you can't go beyond the default setting. So we'll go ahead and leave it there at 8. You can see you're trying to get filled at 10.35 or higher. That's your premium being collected, $3,468, cash required, $36,532, and then your days till expiration, 50 days till expiration. You can see the purple vertical bar here is your expiration date, and you always want to get out of these before expiration. We don't hold things till expiration. If you automate it, you're going to be out when it turns blue or red, whatever happens first. So we'll go ahead and just accept that alert. And there it is. Just assumes you're filled in the demo account. And then we'll go ahead and look at this one here. This is the next alert. This looks like a bear hedge. Okay, so here we go. You're buying the April week 1 put spread, but you finance it by selling the April week 1 call spread for a credit. So you're actually doing this for a small credit. And you can see here, here's the current market price. So you're selling an out of the money call spread, using that money to buy an out of the money put spread. And again, the default setting here, the quantity is all set up for you, but you could always lower that if you wanted, but you can't add risk. We'll just go ahead and lower that to 9 just for the heck of it. And we'll accept that position, and it's just that simple. Okay, so now you've seen kind of an overview of the ThetaTrader dashboard. And if you were to refresh that screen, give it a second, you'll notice that the trade alerts are now no longer active because you've already accepted those. Just taking a moment. And then I want to show you the best, I guess the best feature of all in terms of the trade alert and how that works. So let me shift gears here. And I just want to point out too that, again, theta trades can be, they can be bullish, they can be bearish, they can be non-directional. They're not just about collecting premium. You know, as you see down here, you've got some open bought positions too. Here's a NASDAQ, bought 5 put spreads. You know, obviously that one's doing well. You can even buy a condor, and you see an example of that here. Here's buying some put spreads here, buying some gold call spreads. So really, it's very flexible. But let me go ahead and switch screens, and I want to show you the best feature of all in terms of the trade alerts. Okay, so these are the one touch or 1 minute responsive trade alerts on your phone. So it's just like you saw on the dashboard, except these come to your phone. So these alerts again are live, meaning they're integrated with your AltaVest trading account, and you simply touch accept to place that order. So here's what it looks like. You get a text message. It'll take you to the screen. It'll describe the trade just like you saw. You get a graph. You see the quantities pre-selected, premium collected, the price you're trying to collect, you know, how much cash is required. You could change the quantity if you want. You could lower it. There's 52 days till expiration on that. And then if you like what you see, you just touch accept. And then the order's placed. So it's just that simple. Clients really love those trade alerts, especially when they come to their phone like that. All right, so let me jump ahead and let's see how you can get started with a ThetaTrader lifetime membership. It includes everything you just saw and experienced with ThetaTrader and the software. You get the Theta trades, the risk thermal indicator with the automation, and then the trade simulator that allows you to go backwards in time and test out any strategy over any period of time. That software is valued at over $3,500. And then, of course, you have the one-touch trade alerts. That's all part of the package. And you saw how you can get those on the dashboard. They'll come to you via email, and they'll also obviously come to you on your phone. You just simply touch your screen and accept or reject the order, and our technology handles the rest for you. And once your order is filled, then of course you can have the RTI, the risk thermal indicator, can automatically manage those trades for you. So if it turns blue first or red first, you are out of that position automatically. So it includes everything in that membership that you just saw. ThetaTrader technology, including the alerts, valued over $8,000. But I think what really sets it apart is us. We're real people doing this with many decades of experience, and we're licensed and regulated. And we're here to be your coach along the way. We can do screen sharing sessions for you, review your trade history, look at any future trades. People like that a lot, and kind of like having a co-pilot. So you have a relationship with someone who's licensed and experienced. I think that's invaluable. Value that at $7,500. I know people are sometimes spending $25,000 or $50,000 even on getting educated, which is fine. But with ThetaTrader, we provide everything you need within the platform and with our own expertise. So ThetaTrader includes everything you've just seen, the software, the alerts, the private coaching, and it includes, of course, the proprietary research that we took a brief overview of. So everything you've just seen, it's all part of the ThetaTrader lifetime membership. So again, it's a lifetime membership. I didn't mention tutorials. We have video tutorials as well within ThetaTrader. So that's a real great resource. Little videos, maybe 2 to 3 minutes each if you need a little bit of assistance. But it's actually very intuitive and user-friendly. So Again, the lifetime membership, the software, including the alerts and the private coaching and all of our proprietary day-by-day research, valued at over $18,500. But of course, that's not what we're going to offer this at. We do this in live in-person events for $4,000. But of course, this is a special offer, and this is going to be even much less than our retail price. This is kind of our mad price. We don't go any lower than this. Here is the link. It's only $497. It's a lifetime membership, one-time payment, cf.altivest.com/mad. If you have any questions, you can always call me directly or email me directly. And if you want a free membership, you can fund your trading account within 30 days. And if you have 100,000 or more, you get a 100% rebate. And if you have 25,000 to 99,000, then you get a 50% rebate on that membership. And there's also a 30-day guarantee on that. So if you sign up and something happened and you have to back out, that's fine. Let us know. We'll just refund your membership. So for a few FAQs now, reasons to trade the E-mini S&P 500. I kind of threw a few of these in here, but this sort of sums it up. They're liquid, they're efficient, and they're cost effective. But drilling down a little bit on liquidity, deep pools of liquidity and a wide array of expirations. I think that's a good summary. And the E-mini, S&P 500, and NASDAQ 100 driving growth in the equity options trading, according to the CME group. This is your average daily volume here, over 1.4 million, just on the E-mini S&P 500 options. And that results in superior execution compared to SPX options, and that's according to the CME group, offering a cost savings of $4 to $15 per contract. So you get those tight bid offer spreads in this particular space. So again, deep liquidity, a wide array of maturities, largest market share. So you have a densely packed strikes, 100 annual expirations, you get granularity and coverage. So what does that mean? This is what it looks like, I guess, on a graph in terms of just describing what that means. You have, for example, calls and puts, and then the algorithm in ThetaTrader is looking for more calls and puts to sell every day. And so here's another set of calls and puts, and then here's another set of calls and puts. So as time goes by, it's searching for strike prices, and those strikes are going to be there because there's so much liquidity and volume and depth. And this is where volume, price discovery, and technical levels in the S&P 500 occur in the futures markets. More than 10 times the value traded across compared to all the S&P 500 ETFs. So the E-minis are really powerful. They're mini but powerful. There's also no pattern day trading restrictions when you're trading with us. So, you have, if you're familiar with that or not, briefly, you have additional regulatory scrutiny and limitations, and then you can be prohibited from making further day trades if your account falls below 25 grand. So that's with securities, but that doesn't apply when you're trading futures and futures options. And then margin is more capital efficient compared to securities. Again, that's according to the CME group. I won't pause and get into all the details there, but there is definitely tax efficiency. Futures and options are tax efficient according to the IRS code. They're considered 1256 contracts. So this simple example here, compared to trading stocks, you have a tax savings of over $2,000 with a higher internal rate of return. And that's because 60% of the gains are taxed at your lower capital gains rate, typically lower capital gains rate. So you have a big tax savings when you're trading in the futures space. No more itemizing. It's a big advantage. You don't want to end up like this guy here. So you just get a 1099 with your P&L at the end of the year. It's just very, very simple and effective. But always consult your tax advisor or expert on these matters. You can do an IRA. We do have those transfer in all the time. And then here's another thing I want to point out too. With ThetaTrader, you can trade that E-mini 6-legged dragonfly as one trade. So you saw how we just did that in ThetaTrader. You just 6 legs of an option strategy are placed at one price, one order. You don't leg in. When you do this with stocks, you can't do it as one order, as one trade. I've never seen it done that way unless some new software is out there. I've seen all the big box brokerage firms. You have to log in and then submit 2 separate spread orders and leg in, I should say. So it's very inefficient. So you have this immediate access to these sophisticated option strategies when you're using ThetaTrader, because keep in mind the pros are not just option buyers. They don't just rely on buying options. Only rookies rely on only buying options. It's really the worst strategy you could rely on, because probabilities do not favor you, because theta is always against you. Time is always working against you. She mentions here the appeal for retail investors to buy options is they can be much cheaper, but your potential for profit is actually not that high. In 2021, 11% of Robinhood active users made an options trade, but of that 11%, fewer than 1% actually made multi-leg options trades. So you want to trade like the professionals. You want these multi-leg option strategies in your back pocket. Some more advantages. How about just tracking 1 or 2 markets like ThetaTrader does and not trying to follow thousands? There's also a clear cost structure. There's no payment for order flow when you're trading with us. Remember, these are not securities options. These all trade at the Chicago Mercantile Exchange with their electronic platform called Globex. Every order is equal. So you have an order for 1 position or 1,000. It all gets executed in the exact same way through the Globex exchange. Our rates are 5.25 round turn. That's all inclusive of all fees. You might see others publishing rates like 2.25, and it seems like that's a lot less, but that's only half of the trade or per side. And then you see the yellow highlighted here. They have this little asterisk here that does not include clearing, exchange fees, and NFA fees, and ends up being higher than what we charge in a lot of these cases. So our rates are competitive. Performance on ThetaTrader is different for everyone. We're a brokerage firm, so everyone uses it differently. But also keep in mind the calculations in ThetaTrader are net of all trading costs. I should have pointed that out, been more clear on that earlier, but everything you see is net of all cost. Different types of accounts, like I mentioned, IRA, but of course, corporate, trust, individual, joint, you name it. We do all the above. And then, why would you even consider something like ThetaTrader? Well, really, it's an alternative, and it may improve diversification and lower portfolio risk. And risk of what? Well, how about inflation for starters? Look at this. US dollar lost 99% of its purchasing power since we left the gold standard in 1971. So here's the $1 million house when we were kids, and now here's what the $1 million house looks like. And then look at this too. People even forget about this looking at their stock market portfolio performance. Well, if you inflation adjust everything, it's not necessarily that great all the time. Even Apple revenue is down when adjusted for inflation. So I thought that was kind of interesting perspective. That's since 2021. So ThetaTrader is an alternative, and we like that low correlation to the traditional asset classes. They call it absolute return, meaning you can have strategies in ThetaTrader doing something completely different than what the market as a whole is doing. So just to review the benefits of ThetaTrader and the E-mini stock index options. Strategies for any market condition. You can use premium collection, can offer a wide margin of error. How about the convenience of automation? You can diversify or hedge with these non-correlated strategies. And then you have that one-touch responsive trade alert functionality as well. So again, bull, bear, non-directional strategies. We're not trying to day trade. These are kind of slower moving. You don't always have to try to day by day choose the chop and try to put your Gann lines on there, figure that out. Wide margin of error. There's 1,450 points between the sold calls and puts in this example. It's a time saver. Here's someone spending 10 to 12 hours a day consuming themselves with the market. I don't think any of us want to do that. You can diversify in this alternative space. Again, we kind of talked about non-correlation, absolute return. So you really don't want probably 100% stocks, and you've got the traditional 60-40, but having something in that alternative slice makes a lot of sense to us. Keep in mind, stock market drawdowns can last decades. I know they were Steve and John chatted briefly before I got on about some of their calls here for the recession and what to expect and whatnot. But this is just the most recent one in memory here. How about the NASDAQ down about 80% from its 2000 high? And that took 15 years to recover. If you were unfortunate enough to have bought, at the worst possible time, which of course a lot of people did. So you don't want to be static. You don't want to be a deer in the headlights. You want to be nimble. You want to be flexible. You need some different approaches you can use to speculate or hedge your portfolio. So you get those one-touch responsive trade alerts. We saw those demonstrated. Again, you can accept on your dashboard via email or simply touch accept on your smartphone. So this is what it looks like on your dashboard. And you just touch accept, and here's via email. You get a link in your email. And then of course on your phone, you just touch that link and it takes you right to the alert. And then you can also size that differently. If you want to lower the quantity, you can, but you cannot add to the risk. And if you don't like what you see, you can simply touch reject, and that's fine too. But that's just kind of a summary of ThetaTrader and the membership here. You get the software and the personal coaching at our special MAD price. And then this is what happens when you sign up. You complete the order form. You'll get your ThetaTrader login. You'll get an email on how to open your account. And then once your account is open, you fund the account, usually with a wire or ACH. And then you can begin trading with live money and accepting trade alerts. So again, these are algo-driven options strategies. They help control your emotions with using the automation. And again, bullish, bearish, and non-directional strategies, very flexible, kind of a go anywhere approach to trading. And then you have that trade simulator. You can go backwards in time and you can test, any window of time if you'd like to see how strategies would have performed. Call it a time machine. And so here's the last slide, and that's kind of a summary. We'll leave that up there. And let's see if I have any other comments or questions along the way. I didn't cover anything. Someone's asking about how would this have worked in 2008, 2009, 2019, and COVID. Well, when you say how did this work, I mean that's kind of an open-ended question because you could use any strategy at any time within ThetaTrader. So what you'd want to do is just go back and look at a particular strategy or approach during that window of time and use the simulator. Again, everyone's using it differently. You can have bullish strategies, bearish strategies, or non-directional strategies in place at any time. But that's definitely the way to figure that out is to use the trade simulator, and then you can go take a look for yourself and kind of run those scenarios. And let's see what else. Oh, sometimes we get the question, sorry if you're in Canada or in the EU, we typically can't work with you. And that's just some regulatory issues that are out of our control. We'd love to have you, but do contact me anyway. If you are thinking about joining and you happen to be in one of those areas, and let me know your situation. I'll let you know if that'll work or not. And the minimum account is 20,000. So we get that question a lot. And part of the reason for that is you can see that a Dragonfly, for example, has a margin of just about $5,000. So someone had, say, $10,000, they want to do a Dragonfly, then, that's a lot of concentration risk, one position representing half of their account. So we don't recommend that. Yeah, the minimum, good question. 20,000. If you want the rebate, it's 100,000. You get a full rebate of the fee, membership fee, and 50,000 and above, then you get a 50% rebate of that membership fee. But thank you for that question. And someone's asking about most conservative strategy. Well, I mean, I guess that's kind of a loaded word in this context. If you want to just only buy options, I guess in a sense that's conservative because you can buy options very inexpensively. However, the likelihood that they pay off is very low. So I'm not sure how you'd want to frame that. And then the opposite would be if you're selling deep out of the money puts and calls, the likelihood of those trades working is quite high, depending on what the delta is. You know, it could be like, 95% probability of those options expiring out of the money. But when they do take a loss, you're going to end up sometimes losing. You might collect $100 on that trade, but when you cover it, you might have to cover it, say, at $300. So again, it's kind of hard to describe or hard to define what you mean by conservative. And let's see. Clearance required for trading futures. No, there's no like level 1 or 2 or 3 options trading like you would have with securities, nothing like that. You just open your account with us and you can trade any of these strategies. And ThetaTrader is our tool, so you have to have an account with AltaVest to use it. So thanks for the questions. But I think my time is up. And yes, even with an IRA, you open an IRA and you can access all of these strategies we just talked about. So I think I'm good, John and Kate.
All right. Thank you very much, Eric. Outstanding presentation as always. Look forward to working with you again